Hi, and welcome to The Hash. I'm Zack Seward, joined by Naomi Brockwell, Ben Powers, Jen Sanasie, and Will Foxley. What a crew.
Hello.
What a squad. Happy
Hello.
Tuesday, folks. Naomi, you have our first story of the day. I will pass it right to you. Take it away.
I have the first story. So we're going to China and we're looking at all the things going on there. So apparently there has been a massive sell-off in Chinese technology stocks. It's been accelerating today, and I think that it is obviously in relation to all of the crackdowns on big tech in China. There's also been big crypto crackdowns. So we're going to dive into all of that. So the Hang Seng Tech Index in Hong Kong, which includes stocks such as Tencent Holdings and Alibaba Group, apparently it tumbled 8%. And this is its third day in declines. And also the Hang Seng Index dropped 4.2%. So these are big tumbles there. Obviously, the government has been on a rampage to rein in big tech. They're using all these reasons such as data security and monopolistic behavior and financial stability. Honestly, I mean, I'm going to keep saying that. I think it's all about control here and really clamping down and letting these companies know that they're under the thumb of the CCP. Now, they're using lots of nice words to kind of couch it in different terms, but it really does seem that they're trying to get the best of both worlds. You know, they're saying, oh, you private companies go and create wealth, but at the same time, you know, you're going to be under our thumb and don't forget that we will control you. Obviously, the market is not reacting well to this and saying, well, you can't really have both. You can't really have the freedom to allow these companies to grow and give the investors confidence to know that there's going to be a good regulatory future for them. And then at the same time, like keep them all controlled and under your thumb. And so we're kind of seeing that play out in the stock market right now. So let's dive into that, and then we'll talk about the crypto angle of this. But Ben, what was your take on this big decline in Chinese stock for tech companies?
Yeah, I think it does like snowball a little bit too in some ways. There was some chatter during this going on that like, you know, signups to WeChat had been halted. That turned out not to be true, but it's like, you know, all these things are just kind of being escalated in a lot of different ways. And I think the FUD that comes out of it is just as important as the actual sell-offs in terms of what companies are thinking with, you know, if they want to launch there, what this might mean for further growth down the line if you're a startup. And obviously what this means in terms of, you know, security, data privacy, and just privacy writ large. And we're looking at the ways that all the tech is involved here. I think that the crypto angle is interesting to me. It seems like, you know, HUOBI is winding down their sort of shell company aspect that they had there, though there wasn't a whole lot of operations with it. Simultaneously, you have like OKCoin winding down their Beijing office. And so you're starting to see like, you know, not just miners starting to leave China in some ways, but you're seeing exchanges sort of bulk at some of the regulatory uncertainty or control that'll be exerted. So this is one that's going to continue to happen, but those were two sort of data points that I found interesting just in the sense of like, you know, at least in HUOBI, it's like, we're not even going to try this down the line, right? There wasn't a whole lot of operations within this company, but, you know, it did give them the option if they really wanted to build that out. That's no longer the case.
For sure. So it's, I mean, it is really interesting looking at all these dynamics here. So Tencent briefly suspended new signups for its hugely popular messaging app WeChat. And so this has unsettled investors. There just seems to be a real lack of regulatory clarity there when you have a system where any day, you know, a company could be nationalized, or you could just be stopped from doing an IPO, or, you know, you could just have the company broken up, or, you know, there are all kinds of things going on there, and it really is unnerving people. And we've seen a lot of capital flight from China for this reason, but things have been seemingly going okay on the tech side and companies booming. But now maybe we are starting to see the pushback from the market with seeing this clamp down. But Jen, what's your take on all this?
Well, while I was reading these, I was wondering, are we going to see a big migration, I guess, when it comes to Chinese talent? We've seen the miners kind of migrate away from China looking for new homes. And are we going to see the tech talent kind of move out of China? And what kind of impact is that going to have on the industry there? And then when we were reading about Naspers, I thought, you know, this isn't just a China story for our audience. This is going to have a huge impact globally. You know, Tencent is their majority shareholder, is a South African company. And when we start to think about the impacts that this Chinese regulations are going to have for companies worldwide, I think we're in for an interesting next few months or year.
Sure. Will, what are your thoughts on all of this?
Yeah, so interesting that it's not only just tech stocks itself. I think we're kind of seeing like the fingers of the totalitarian regime there spread out for the first time in the last 10 years in a way we haven't seen before. There's a report out of CNN yesterday that they're also clamping down on education, the education sector in China, like the private market for education. And that market's actually pretty large because a lot of people do not want to go through like the public markets for educating your child or just like self-education. And so there is like a pretty large private market for that as well. And now the Chinese government is clamping down on that, and the stocks for those kind of companies also was going down yesterday too. So I think we're seeing it across the board on many fronts, not just tech, that the Chinese government is really starting to clamp down on a lot of different projects across the board. I'm curious if it's just because of where the CCP is in terms of the maturity of this current regime and under this president, or if it's just because of the coronavirus and last year, and if they're saying like they're needing something to step on because of how tough the last few years have been. But Ben, I'm going to give it to you. I think we're going away from this topic.
Yeah, I mean, I think it's also worth noting that, you know, NATO and the U.S. condemned China recently for being behind a variety of different cyber attacks. So the more, you know, control over the kind of cyber playing field that happens, I think we're going to see tech companies come under more and more scrutiny for potentially being maybe avenues for that in a variety of different ways. So that's just another side note for the geopolitical conflict that always reigns around cybersecurity. But keeping it in the world of tech, Zach, you called this one quite aptly while my mic was messing up yesterday. Amazon has flatly denied any plans for accepting Bitcoin payments and said, you know, notwithstanding our interest in the space, the speculation has ensued around our specific plans for cryptocurrencies is not true, an Amazon spokesperson told CoinDesk. So this came in relation to a thinly, as like paper thin as possibly sourced story from City AM, which is a London publication that, you know, Amazon was going to not only start accepting cryptocurrency payments this year, but also put out their own coin potentially next year. Amazon has flatly denied that. And I think what was interesting is, you know, Zach, you kind of went with this at the angle of, you know, this didn't really help the market. Why are we talking about the market being based on this? But Bitcoin's price did start to fall upon these denials coming out. So I was a bit surprised by that. I thought that we had maybe moved past this sort of pure reactionary aspect, but alas, maybe not. I'm curious to get your thoughts on this.
Why would you think that, Ben?
Adorable, Ben.
It was
optimism,
yeah.
hope.
Yeah.
Why hope? It's the hope that kills you.
It is really interesting. You know, on a day in which some major news came out about Tether, Amazon rumors were really what was driving the market yesterday in Bitcoin's price. So yeah, it was interesting to see that price fall off after this was batted down. But yeah, can we just talk about how cool that photo of Jeff Bezos was? Because that was a good, inspired photo selection. But yeah, no, I mean, you know, such is the wild world of crypto market sentiment sometimes. You know, it doesn't necessarily need to be rooted in fact to move markets. And I think we saw a good example of that with this episode. You know, whether or not this was an elaborate hoax perpetrated by crypto influencers against unsuspecting reporters, we still don't know. But now we have a pretty strong denial from the company itself saying, hey, pump the brakes. You guys are crazy. So, yeah, interesting to watch it. Interesting to watch that happen yesterday. Naomi, I saw your hand up. Very curious for your thoughts.
I mean, it's interesting that they've flatly denied it and there's no chance, you know, this is definitely not a true story, because we look at the news that came out last week where they're posting this job listing to hire a digital currency lead. And then they say, you know, we're inspired by the innovation happening in the cryptocurrency space. We're exploring what this could look like on Amazon. We believe the future will be built on new technologies that enable modern, fast, and inexpensive payments, and hope to bring that future to Amazon customers as soon as possible. So this story comes out and says, yeah, they're going to be looking into this by the end of the year. And they're like, absolutely no way. Flatly deny that. Where would you ever get that idea? It's just absolutely crazy. So, I mean, there seems to be, it's very interesting that we've got kind of these two narratives out at the moment. About a couple of years ago when Whole Foods was bought by Amazon, they merged. I actually asked John Mackey, I said, you know, when Bitcoin, John, like, when are you guys adding it? And his answer at the time was, you know, we're going to be the last ones. We are going to be like Amazon, Whole Foods. This is going to be the last company that is going to adopt this. And I guess because it's just so big and incorporating something like that is just such a massive shift. This is a huge undertaking. So that's interesting. But obviously they are preparing. Seems that it's not going to happen this year, but it does seem that something is in the works there.
Yeah, and I think it's worth noting in that context too, like, hiring up for a lead for like a, cryptocurrency just generally, and sort of, in that job post, they were talking about like developing the roadmap and sort of like project timelines and stuff. So they're seemingly very, very early on still in this like planning phase, if that's what they're starting to look for specifically for somebody to help carry out. And I think it's too worth pointing out that, Amazon passed over PayPal years ago. Like they've not had a great record of trying to incorporate new payment mechanisms into their own company. Like they tried to make, Amazon stores, which was the precursor to the marketplace, and that fell really flat, and they eventually shuttered it. So they don't have a great track record on payments in a lot of ways. So this could be just a much larger undertaking than something they've done in the past. And that could be the reason for maybe this protracted timeline that we're talking about. But Zach, to you.
Yeah, I mean, it could be something more boring like, stablecoin payments or something, right? Like we're going to accept USDC payments for stuff, and it's easier than, setting up foreign entities and having local currencies and bank accounts all over the world as a global company. Let's just do it over crypto rails. And that could be very different than like, oh, Bitcoin, like, we're going all in on Bitcoin. And that was sort of like the sentiment over the weekend was like, Amazon's going in on Bitcoin. There's Amazon Bitcoin rumors. This is tight. Yeah, should be interesting to see what the plans ultimately end up materializing into. But hey, we'll talk about it another day. Let's take a break. Let's go to the break. Let's go to a break. We're going to talk about Monero bugs when we get back. Little bug detected in some Monero code. Talk about it when we return. It's The Hash. Thanks.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back to The Hash. So we're moving over to Monero, which, of course, Ben and Naomi are going to love this topic. It's their favorite coin ever. So that's exciting for both of them. Essentially, there's been a bug found in the Monero's. There's been a bug found in Monero's code base. And it's like a pretty simple one, but it is a serious one. So essentially, you can not track an address or not track a transaction, but you can prove a transaction is a real transaction if you transact immediately after you receive your Monero from someone else. I think there's like some sort of time limit. We're going to, of course, give this over to Ben and Naomi in a second for a little bit more in depth here. But essentially, like if you move your Monero 2 blocks after you receive it, which is like the minimum for doing it, someone can tell if that transaction was real or not. Monero, of course, uses this thing called ring signatures, where they throw in a bunch of fake transactions into a bundle of real transactions, and that makes it very difficult to find out if a transaction was real or not. But Ben, let's hear from you. Why does this matter? And maybe explain it a little better than I did.
No, I think you're getting at it. I think what's important to note here too is that, an address is not revealed and that the amounts spent are not revealed, but they are able to kind of, take a look at that decoy algorithm, which is throwing a lot of stuff out there, trying to distract from what the actual output is. And you can identify that aspect. So this is interesting in a couple different ways. I know that Monero, I pinged a couple devs, and their recommendation is like wait an hour at least before when funds unlock, before you start sending them all over the place. And, at the very least, like wait 3 blocks. That's sort of the foundational thing here. They're looking at fixes on it. It's not going to require a hard fork, but it is discouraging. And I think it shows sort of like, the limits and layers of privacy that can be sort of pierced in a variety of ways, particularly even with like, a coding bug. And I think it's also noteworthy because Monero sort of does have this approach of like move slow and do it right. And they really do have a commitment to being the most private currency that they can be. And that makes this all the more discouraging, unfortunately, just because it shows that nothing is perfect or a panacea, particularly when it comes to privacy. So a small development here, but a significant one. And I think what's important is that, people are aware of this, but it also is, again, and I'll just say it again, disappointing because the people that are using Monero are the ones that have taken the choice to like add some friction to their lives, use the most private of privacy coins in a lot of ways that they can. And Naomi, I guess I'm curious to get your thoughts after that.
Yeah, so it's interesting. And as you already said, this only affects people who send transactions in quick succession. But there is a good chance that those transactions are at least partially de-anonymized, which is scary because, as you said, Ben, this is a coin that is the most popular on dark markets. It's actually not the most popular in terms of total usage, but on dark markets for sure, in terms of privacy coins, I mean. The devs that I've chatted to said that this should be a pretty easy fix. It's more of an implementation problem rather than the algorithm itself. So that's interesting. And it's not the first time that Monero has had issues with decoy selection. But it's interesting because, like, just to kind of explain this in like a kind of break it down, like the way that they were picking random decoys. So Monero works by, you send out your transaction, that's the real one, but then there are a bunch of other transactions that are thrown in there that are decoys. So the way that they pick these random decoys, and due to the way they implemented it, it made it almost impossible for a recent output to be used as a decoy, which means that if you use an input that uses a recent output, then you will know that that's the real transaction. So that's like a big kind of hole there. You don't want to be sending something then immediately passing it on. And honestly, like when you're dealing with privacy coins, a lot of people are moving this stuff fast. So it is a little worrying. But yeah, as I said, people I've spoken to, and I've spoken to devs on other privacy teams as well, like Ruben Yap from Firo, they say that, it should be a pretty easy bug to fix. They wouldn't be surprised if something comes out like in the next, 48 hours, some sort of quick fix for that. But it is something that they're going to have to deal with, because I think waiting an hour and just add so much more friction is crazy. But Will, I saw your hand go up.
Yeah, I think this kind of points to the larger story that the perfect privacy coin doesn't exist. Every coin has some sort of drawback, but there's some really good options on the table. So Zcash, for example, is the other large privacy coin in the room. And there's some headaches with it. It's really hard to make a mobile Zcash wallet. I think they only introduced their own client version last year, and it takes a little bit of know-how how to use it. And I think it's getting simpler over the years. And Naomi, I know that you interact with privacy coins a lot more, so you can probably speak to that example a little bit more in depth. But in general, I think that the privacy coin market is always adapting and it's always growing. And I think that kind of speaks to where the market is going in general. For like Bitcoin, Ethereum, for other chains, they're wondering and waiting to see what these privacy coins come up with. They're really research intensive. They take a lot of capital to get done right. And they're under regulatory burdens more so than other coins are. So to me, none of this stuff is bearish when it comes to privacy coins. This is just kind of the road they're taking. They're going to have to keep going through these speed bumps along the way.
Mm-hmm. And I will mention that, so it was Justin Berman who I believe first spotted this bug. And there is a tweet that he put out. He says, a significant decoy selection bug has been found that may severely limit the privacy of spends shortly after receiving funds. This bug persists in the current wallet code. This is not good at all. And kind of goes on to explain
I gotta jump in. Justin Berman was the developer who found it. That's Justin Ehrenhorf, who runs Monero Spaces and does the Breaking Monero program. So two different Justins, though they will be joining to talk about this.
The Justin collision. Oh my gosh. Jewel to the death. Justin's.
So yeah, got that privacy coin joke. That's disappointing. It's okay though.
Okay, yeah, thank you for clarifying that.
No worries.
But yeah, it is good that people in the community are watching this closely and letting people know about this and hopefully providing quick fixes. We'll see how long that takes. But good luck to the Monero community. But let's change track here. Zach, what have we got next? Who knows?
We have so much excitement. We just don't know what it's going to to be. But no, I'll tell you what it is. I'll tell you what it is. That's what it is. Crypto FinTech Eco just raised $60 million. These are the folks that we covered last time because like Kevin Durant and like P. Diddy invested in them in their seed round. And now they're raising some more money because they're finding a little bit of success with this whole high yield USDC account thing. So they got some more money. This is one of those projects that takes a crypto back end, pretty much makes it normal on the front end. And they seem to be having some success with that, at least in the early innings. I'm going to toss this to you, Will. I see you nodding vigorously. What's your take on Eco taking on some more cash with this whole stablecoin savings thing they do?
So I don't know about this project specifically. I like the idea of people being able to interact with DeFi, even though they don't know they're interacting with it. And of course, getting a yield just simply is really nice right now. But in general, I'm wondering what everyone thinks about all these crazy values and offerings going around. I think Fireblocks just closed something this morning also, and then we can see FTX the other week with that almost $1 billion raise. Coin prices went up this week, but they've been crab walking, or at least down, for like the last 6-8 weeks. So like, why? I feel like at some point, I think we talked about this last week, at some point it's got to dry up. Like, valuations have to go down. This also comes after SushiSwap, which is another like exchange, tried to put out like this VC funding round where they were like offering the tokens at a pretty high valuation for VCs themselves. And they got some flack for that. And there was some feedback. And I don't know where that project ended up. But Zach, I want to get your thoughts. Why are projects getting so much money when we're so uncertain if this is the end of the bull market and the beginning of a bear, or just another leg up?
Yeah, it's a really great point, and you're right. We've just been getting some absurd valuations. Like Fireblocks raised $310 million in a Series D that valued it at $2 billion, and now since FTX is like an $18 billion company, according to its last $900 million funding round, we're just like, yeah, no big deal. We're not even going to talk about it on this show today. So the fact that these numbers are getting really, really high, I think it's sort of like the tail end of investors realizing some very large gains from the past however many months in the crypto markets, and we're sort of starting to see these announcements, so these raises that had been put together, possibly during peak mania. We're seeing those being announced now. And I think investors are keen to sort of frame this as, hey, we think that this has long-term traction. We think we're here for the long term, and crypto really is going to be transformative to how people interact with their money. And that's the company line that you're getting from sort of the VC industrial complex right now. But it's going to be really interesting to see if these big numbers stay up, or if they're just merely an aberration. So I don't know, but I'm curious for Naomi's take on that, actually.
Yeah, I just want to kind of continue on with what you were saying, Zach, and what you were saying as well, Will, when you're like, is this the beginning of a bull market? Is this the end of where does the bear market end? And Zach's absolutely right. Like, I think that it's becoming less and less significant when these bull and bear markets are, because long term, clearly people are seeing the future of cryptocurrency and pouring all their money into it. Like in the early days, when you had a bear market, you were like, is this ever going to rise again? Like, the first time it crashes, you're like, okay, that's the end. And this is just, reinforced with all of the obituaries that will come out about Bitcoin. Every single time there's a drop, you'd have all of these articles out saying that's the end of this magical internet money. And then you'd have another bull market, and then you'd have another bear market, more obituaries. And the more you have these things and you just see a steady, long-term growth pattern, I think people are starting to realize, it really doesn't matter the short-term ups and downs, because long-term, everyone's pouring their money into this space. You just have huge investment. And that should be really where we're focused on, rather than, day-to-day fluctuations. But Jen, I think I saw your hand up as well.
Yeah, I'm surprised that more VCs aren't getting cold feet with all of this, with all of the regulation that's happening and all of the kind of like regulatory uncertainty. I want to read a quote from the article. So Eco said that they're watching BlockFi closely. And they said that they're going to make sure that whatever we're doing is in alignment with the latest understanding of every regulation that exists, which is interesting to me because the regulation is not very clear. So I don't understand how they're going to make sure that they are in compliance. And if it was so easy, everyone would do it. So yeah, it's interesting to me that VC money is still pouring into these companies, given that that we're not sure what's going to happen with regulation. But Ben, I think I saw your hand up.
Yeah, I mean, I think I think these have to even out at some point. I don't think these numbers can really continue to go up to the extent that they have been in just like the last even 6 months, it feels like. I do think that we're going to have some of these projects at some point, like take a downturn in the ways that we, tech projects start up and kind of close down all the time. But I think that might help in terms of resetting the market around some of these things. And I'm kind of waiting on that shoe to drop, because the optimism and the sort of this kind of only number go up narrative that we've been seeing, I just don't think it can be sustainable. And particularly, I think that what we're seeing is maybe a shift from more, it does right now, but I think that maybe what we're going to see is this playing field, which is still pretty,
US dollars going down,
which is still fairly new and nascent, as people are still trying to pick winners. And where in more traditional tech spaces, we see like Amazon, Facebook, like Netflix, like those winners are already there. Like those markets are a little bit more settled than these. So it could be more speculative and ambitious than anything else, as kind of my initial thoughts there.
And last quick thought before I throw it to Jen. I mean, it's also easier than ever to go public, right? You have companies that don't even have a functioning product, bullish, who are going public in a mega SPAC deal, right? So if my exit as an investor is, if my exit to the public markets as an investor is closer than it ever has been because there's all these vehicles to do that, then maybe it makes sense that I would dump in a bunch of money into some of these companies that are still quite nascent. Okay, point, yep. Sorry for saying that. Jen, take it away. What do you got?
All right, so Shopify announced Monday that the company is now letting merchants sell NFTs directly to their customers. In a tweet, the president, Harley Finkelstein, said, before Shopify offered this capability, merchants would have to sell through a third-party marketplace, aka less control of the sale and customer relationship. He added that they're putting the power back into the hands of merchants, and their first company to offer NFTs are the Chicago Bulls. I guess they're not a company, they're a team. But they launched their NFT yesterday. And so I'm going to kick this down to you, Zack. I think this is really exciting. We talk about user experience and NFTs. Now Shopify is making it allegedly easier than ever for just anyone to sell an NFT using the Chicago Bulls as their use case. What do you think of what's going on there?
Sure, let's do it. Make it easy. Everybody's doing an NFT. We got basketball teams, we got symphony orchestras, we got everybody who's doing NFT. So the ability to bake this into people's websites, I presume, like they just spin up, right? They like spin up like a custom website, and they don't have to work with like D or whatever, and they can do it direct. I think that's fantastic. If there's a way to sort of decentralize the way that these things are sold, as opposed to building up sort of these mega marketplaces, be it OpenSea, Rareable, Super Rare, Nifty Gateway, whatever, it's going to be interesting to see what this looks like if it's more of a direct relationship that doesn't need, another middleman. So interesting to see. I'm curious to see which projects ultimately find success with this model. But Naomi, what's up?
I just want to know why Jen hasn't even mentioned yet that it is based in Canada.
Canada! I know.
I feel so deceived. This was just a Canada promo.
Jen. Yeah, she sneaks in.
Canada, just, doing it all for the world. Innovators. We are innovators. We don't often stay here, but, a lot of the greatest ideas come from right here in Canada.
And from Jen, absolutely.
Yeah, I do.
Yeah, that's right.
I do think from my FUD angle over here, I am recalling that with great e-commerce comes great responsibility in some ways, and that Shopify was a third party that was breached and was a part of the Ledger data hack that happened previously. So I think that the more that these sort of third parties start plugging into websites and start underpinning and connecting a lot of these things, that can have consequences down the line and can affect a much greater kind of cross section of either storefronts that get built up or other things like that. So that just felt pertinent to mention here as we're talking about you can spin these things up, you can do it quickly, it makes it easier to use. It also means that you're connected to another entity that you don't necessarily have full control over.
Ben, it's really interesting you bring that up because when I thought about this story, I thought Shopify. When I think about Shopify versus one of the many other NFT marketplaces that have popped up this year, I think probably that's going to instill trust in people. People are going to look at that and say, oh, they've been in business for a decade. They've managed stores big and small. But that's a great point that you bring up, that while the brand name is there, when it comes to the trust, we really need to be thinking about what's going on in the back end and really understanding what's happening with our data.
Mm-hmm.
Yeah, the drop is it's already sold out.
Go ahead, Zack.
What the hell? I wanted to see what blockchain is. Who blockchain is this on? How is this working? What is going on? Anyway, sorry.
It's
Shopify. That's my question too.
Yeah, Naomi,
Me
sorry.
too. I tried to find it.
Yeah, well, I was just to wrap up, I was just going to talk more about the data issue that Shopify, obviously, a lot of their business model relies on them collecting information. These companies all collect huge amounts of information. And so, as Ben said, you plug these systems into the back end of your crypto products, and suddenly you're entering a whole new area of revenue raising for these companies, and you are part of their product. So just be mindful of that when you're interacting with these big, safe, because we know the name companies. They can tend to be a big honeypot for information that's targeted by hackers, etc. And there could be data breaches, as we've seen many times in the past. But Zach, let's wrap this thing up.
Let's wrap this thing. We are wrapping it right now. The hash is over for Tuesday. It's done. I'm Zach. That's Naomi. There's Will. There's Ben. There's Jen. CoinDesk.com rules. CoinDesk TV is also cool. Stick with us. We got great stuff. We'll be back on Wednesday. Love you all. I'll talk to you later. Have a great day.
See you then.
Bye.
And later. And